Hey everyone, welcome to our Facebook Live. My name is Maria Mejia,
And I'm David Pataki.
and we are the co-founders of Your Financial Success Matrix. We are here to fill that gap between being simply CRA compliant and building a successful business. So today, on Fact or Fiction, the question is, or the statement is,
Reviewing your financials once a year is the secret to success.
and that is fiction.
That's fiction.
That is,
It's not false, it's fiction.
it's
I know it's been done up
fiction
before, but
in bold neon orange, green, and blue.
fiction, fiction.
This is
No,
what
no,
this is
yeah.
what I'm really passionate about. But go ahead.
No, exactly. No, you jumped on there. I want to say this. The reason why we're making a big deal about this is because it is a paramount deal. Go ahead, Maria.
All right. So when you measure things, that means that you can also manage them. Most businesses don't fail because they have a problem and they ignore it. They fail because that there is a problem and they just don't see it. So analyzing your numbers on a
Wait, say
regular
that again. No, that's very important. Please say
Yes.
that.
So they, businesses fail because they have a problem and they don't see it. Is there a reason you want me to emphasize that?
No,
Just 'cause they don't
because
see it.
because a lot of business owners, and that's what the financials do. It helps us to identify
Problems, issues.
and once you know about the problem, what happens after that?
So you can
No,
find those hidden problems, but
So, but then you fix it.
Yes.
The simple thing is, fix. I'm just trying to be very
Looking for
simple. If you know what the problem is, you can fix it. But if you don't know what the problem is, you can't fix it, and it might take your business down. In a nutshell, that's what it is. Now I'm going to be quiet now and let Maria
gosh,
explain.
David,
And
he's trying to
very
get on my
passionate, very
soapbox.
passionate. Sorry. Let me
Okay,
get off
apparently
my-
we're
let me
both-
get off my soapbox here.
We're both passionate about this. But the reason I'm passionate about it is because I am an accountant and I'm always looking at people's numbers. And so usually how the process goes, at the end of the year, people will be like, hey, give me an income statement and balance sheet. That way I can attach them to my tax return and send that off to the CRA. And, if I have a profit, that's great. Tell me how much taxes I got to pay. And if I have enough money in the bank at the time, I'll do it. If not, I'll just kind of ignore it for a little bit. I've seen it all. So having up-to-date books, that way you're able to look at your finances monthly, will greatly improve your profitability and also greatly decrease the stress on you and your accountant who's doing your taxes at the end of the year.
Yeah, and if you are doing it monthly, as we talked about earlier, as I was making a big deal about all this, is that you can identify problems early. Like a lot of the small businesses, or even sort of the medium-sized businesses, they put it all together at the end of the month, or end of the year, sorry. Definitely the small ones. Here's my proverbial shoebox with all my receipts in it. Tell me how I'm doing.
Well, I can tell you how you did last year, but I can't
Right, and
tell you
that
how you're
always
doing
happens
this month.
After your year end. And guess what? After your year end, there's nothing you can do to change what you're doing. And it has to do with profitability, it has to do with taxes, because maybe there's something Maria could have identified 6 months ago that if you would have done differently, you're paying a lot less tax.
Yeah, and to kind of go hand in hand with that, most people, they just think of, the income statement, the balance sheet, and maybe the cash flow. They don't also think about having a budget, comparing what did you budget for this year to what actually happened this year, or as we were saying, month to month. If I had a sole proprietor this past tax year where they were like, okay, I want to invest into my RRSP, that way I can decrease my taxes owing, but they didn't tell me that until like five days before the taxes for them were due, and I'm like, well, I can't tell you what to invest in your RSP because you won't get it in there in time to claim it for the tax year you want to. And so having a budget, knowing, okay, I'm going to make this much, which means I'm going to have this much taxes, so I should try and get this much deductions so I owe as little taxes as possible.
Yep. You know, there's always so many ideas, thoughts go through my mind. When Maria's talking, she's got lots of good things to say, and it jogs something in my memory, and then she says something else that jogs something else in my memory. So
Apparently I talk too much then.
no, you're the issue is, at least for me, is that you're giving out too much good information. You're gonna have to keep talking.
Oh,
so
okay, I'll keep talking
come back
then.
to this.
Another good financial report that you should be looking at is what we call common sizing. So
That's what it is.
That's
That's part of.
what you were
Thank you.
thinking
I got
of?
to
You're
interrupt you
welcome.
here. Okay, so at the end of the year, you give the shoebox, you give them your whatever your invoices, and the income statement or profit statement comes, profit loss. You go, oh, my profit was $50,000 this year, or $100,000. It doesn't matter what it is. $100,000. You go, oh, that's really good, right? But what was it last year? Right? If last year your profit was $200,000, then a $100,000 profit this year sucks. Something major went wrong in the past year. But if you're just looking at the 1 year, then you can't compare. It's like if I walked into a doctor's office and I stepped on the scale and I weighed 250 pounds. Would you applaud me, or would you have a conversation with me and say, I need to do something different? But you don't know that, unless you don't know what to do unless you knew what I weighed 6 months before, 1 year before. So if I weighed 350 pounds a year before, then I step on the scale at 250, you're going to applaud me and go, way to go, you've done a great job. But if I weighed 150 pounds a year ago and now I weigh 250 pounds, it's a much different conversation. Just want to put it in that analogy. Back to you in the common sizing.
Okay, back to me. So, as David was saying, it's, you're comparing two different things to see, like, is it actually a good change or is it a bad change? So common sizing traditionally is comparing any of your expenses that you have to your income for that period, either that month or that quarter or that year. So we had brought up our amazing landscaper a couple of Fact or Fictions ago. So if we have a landscaper, he does his job throughout the summer and then he does some snow plowing during the winter, but he doesn't know like how much is his employees costing him compared to how much revenue he is getting for those different seasons. Is he spending more for employees on a certain season? Is he spending less? Is he having to spend more on advertising compared to how much he's actually getting in for that month? So common sizing can help highlight those issues, or even let you know, like, hey, advertisement a month before the busy season starts is really good because you'll get even more profits for that month.
Right, and once you common size something, then it's easier to compare to previous months or
periods.
periods. That's the word I'm looking for, different periods, right? Even from week to week, month to month. But definitely you have to go back. So if you know that your employee costs per revenue was 67% this year, again, is that good or bad? I don't know. Let's look at last year's common size for that. If last year's common size was, if 57% of your revenue went to employees last year, and this year it's at 67%, oh, well, something's happened here. So now you can investigate what was that 10% difference.
Yeah, that could have been either, you hired someone, you fired someone, you created a new job opening that has more responsibilities, so you increase someone's pay. That could all, so many factors could happen to change your numbers.
Right, and again, so once you see that trend, you can, as Maria just pointed out there, you identify what caused that, and then you can make whatever adjustments you need to. Because perhaps you need to charge more because you've got better skilled people. You're a little bit faster, so maybe you need to be you need to adjust your pricing. or anything like that. Or maybe it's your expenses. Maybe you found out that, especially with the price of gas these days, gas has really gone up. So you need to know that. And, I remember years ago in the courier business, when gas did start to spike, they started adding a surcharge, a gas surcharge. Right? Now, obviously, you don't want to put a gas surcharge in there, but the courier companies realized I'm paying more for these to deliver the same service, so my profit has now shrunk. In order to get the profits where I want to be, where it needs to be, I need to put a surcharge on this. And remember, profits aren't bad. You need a healthy profit to be successful. So if you're not looking at your profit and you're not adjusting accordingly, then at the end of the year, it's not a $50,000 profit. Maybe it's a $25,000 loss.
Mm-hmm. Numbers can be so revealing. And so David asks me, how often should we look at financial statements? I say you should be looking at your financial statements on a monthly basis, on a quarterly basis, and on an annual basis, because each of them can give you different insights. If you look at yours on a monthly basis, you can take quick actions to be like, oh, okay, so, my phone bill for this month was higher. Okay, maybe I should try and get, how do you say that word? I should talk to my phone provider to see if I can get, a better deal because, my calls are now, different than what they previously were. Whereas if you look at your finances on a quarterly basis, you can see, okay, so the summer season's my busy season where I make the most money. I should focus on getting more clients at that time, and then I can kind of write it out during the winter or the spring. And then obviously on an annual basis, you can look at and see, okay, just in general, here's how much I made, here's how much taxes I have that's going to be due. Am I going to have to be paying quarterly taxes from now on because the CRA thinks I make too much?
Right, and then I would put my coaching hat on, and if we see that the summer months are really good, but the winter months aren't where you want them to be, we'd be like, okay, so what can we do differently? Is there a product or service that we could potentially add to your business so that it's not such a slowdown over the winter months? So again, if you're not keeping track of it, if you just look at it once a year, then there's no way to get any of those trends and be able to adjust your business accordingly.
So look at your numbers as often as possible. And, since our business is based on having that collaborative bookkeeping, maybe you don't want to be, hands-on all the time with your bookkeeping because it takes you longer and you're uncomfortable with and making sure that you got everything in right. Hire a professional, talk to someone who understands your industry as well as who understands any struggles that you might be facing. Let them know what your goals are for your business, how you want your business to be looking in 5 or 10 years, and they will help you, get set up for that success.
Right, and we're so passionate about the monthly reporting that all of our bookkeeping solutions include a detailed monthly report where we will sit down, we will create a report for you, and then we'll take a 15-20 minute conversation, Zoom, telephone, whichever is the most convenient. Not to go deep, but be able to show you or to identify the trends and give you advice on what you could potentially do. And again, at the end of the day, it's your business. We're just here to give you advice and give you our opinions on what you should do. But it's up to you on whether you want to implement them or make those changes.
Yep. So we hope we helped all of you out there watching us. And feel free, if you have any questions, comments, put them in the comment, message us, let us know. And if you have any topics that you want us to cover, reach out, let us know. And we will talk about them on the next Fact or Fiction.
Yes, and please share to anyone who you think that might be able to benefit from this, or if you think that we even were slightly funny, that maybe someone could use a laugh. Anyways, just share, like, comment.
Subscribe. All the above. If you watch YouTube, you know all the things that we're saying.
100%.
So, we'll see you next time. Bye.
Bye.